Hello and welcome back to the Geordie Pig Investor channel, where we deep dive into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximise your passive income, this channel is your go-to resource for strategies, insights and the tools you need to grow wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. Today's a big one. I've officially hit a £50,000 portfolio. That's right, in under 2 years of investing, we've crossed a huge milestone that I honestly couldn't have imagined when I first started. In this video, I'm going to break down exactly how I got here, the mindset that helped me grow from 0 to 50k. Whether you're just starting out or already on your investing journey, I'm sharing everything that got me to this point. I'm just an ordinary guy who works an ordinary job, but when you combine that with hard work and consistency, it just shows that anything is possible. Let's get straight into it. If you didn't know already, I am actually a dividend focused investor, so all the companies and ETFs I invest in are dividend focused. I invest in dividend paying stocks because they provide a steady stream of passive income while I grow my portfolio over time. Unlike purely growth-focused stocks, dividends offer real, tangible returns even during market dips, helping to smooth out volatility. Plus, reinvesting those dividends accelerates compounding, allowing my money to work harder with every payout. It's a strategy that balances long-term growth with consistent cash flow. It also keeps me very motivated when I see the dividend payments flowing in on a monthly basis. I'm going to give a shout out to Steve for his comment in the recent portfolio update video, as he wanted to see my net deposits on screen for these types of videos. So I am going to be including that in today's video, and I know there's a few others who liked that comment. So hopefully this will help you see how much I had deposited throughout the 2 years of investing, and it can really help you see how I've been able to grow the portfolio to the size that it is today. So as you can see on screen right now, since I started my journey, I've added £45,500 to it, and I've so far returned just over £5,200. My portfolio was just over £50,000 this morning, but there was a huge price drop in B&M, and this led me to investing some of my cash into the portfolio to take advantage of this drop. That's why the portfolio is now valued at over £50,700. So if I show you it on a weekly basis, we can see it was hovering around the £49,000 at the start of this week, and then this morning I woke up to that big spike to 50,100, and then I've been able to get it up to £50,700 right now. If we have a closer look at the portfolio on a month-to-month basis from when I started back on the 1st of August 2023, we can see that from the first month I invested £1,000, and then thereafter I was able to just continue investing every single month. For me, I always try to pay myself first, so every payday I would put in a set amount each month into the portfolio, and the bare minimum was usually around £1,000. Then I'd look to add any additional capital I could if I was able to after I paid out all my bills and expenses. I'd also like to add that I do own my own property and have a mortgage and pay for the bills, so I have been a homeowner for over 4 years. So for anyone out there who thinks it isn't possible to invest while owning your property, you definitely can. You may just have to work that little bit harder. I know that in my own full-time job, I am always the first person to ask for overtime, and have always had a hard work ethic. This is really a big milestone for me, as I'm now 50% of the way there to what I believe will be a major turning point in my portfolio. I've always said to myself that once I hit the £100,000 mark, I can take my foot off the gas and truly let the compounding effect do the heavy lifting. Don't get me wrong, I will still be investing my own capital in the portfolio, but I know that I can ease off on overtime at work and spend more money in other areas of my life. I'd also like to add that I do have a life outside of investing. I would probably still class myself as fairly frugal, but I do go on at least 3 holidays per year, and I like to think I enjoy myself at different types of music and sporting events year round. Anyways, let's now have a look at the portfolio performance over the last year. We can see that in the last year it has performed very well, returning a rate of 12.7%, and I have seen a gain of £4,200 within the portfolio over this period. Then if we have a look at how it's performed over the last 3 months, we can see that we've had a rate of return of 8.9% or close to £4,000. And the most impressive part about this is that if we have a closer look, you can see that at some point we were actually down over £700 on a 3-month period. And then since then it has recovered very nicely. That was when the Trump tariffs hit, because obviously there was some turmoil within the markets then. I took full advantage, added as much capital as I could to my portfolio, and we have reaped the rewards since then, with it, like I say, now returning over £3,900. On a monthly basis, we've had a 3.8% return, being up over £1,800 over this period. And on the weekly basis, we have had a very steady week, being up over £1,000 with a rate of return of 2.1%. Now let's have a closer look at the portfolio itself and the positions within it. You can see that I have 2 major ETF positions in the portfolio. They are the Vanguard S&P 500, which is just over 18% of the overall portfolio, and the JP Morgan Global Growth and Income ETF, which is just under 15% of the portfolio. So combined, these come to around 1/3 of my portfolio, so on my 2 main core holdings, and I'm really happy to continue adding to these positions and want these to be my 2 main core holdings for a very long time. As you can see on screen, my JGGI position is now slightly in the green at just over plus 0.65%. You can see that since March, this position has been in the red, so I've been working very hard to get my average price down, as at one point it was up at around £6, and as you can see now it is under £5.60, which means I am in the green for the position, so that was very nice to see today. And then my Vanguard S&P 500 fund has returned nearly 10% so far, and is one that I just look to add to on a weekly basis. If I then scroll down, you can see I have a good mix of US and UK dividend paying stocks. I am mainly focused on dividend growth stocks, as I still have a long time horizon within the market, but do also have a blend of some higher dividend paying stocks that I believe are good value at the price I bought in at, and can add something to my own personal portfolio. Now we're going to have a closer look at the portfolio over on Snowball Analytics. Snowball Analytics is a dividend tracking portfolio app that I have used since the start of my investing journey. This way I've been able to see how much I'm earning on a monthly basis from my portfolio and what I'm expected to make in the future. It's another great tool to not only keep track of everything and see it a lot clearer, but also keep me motivated to continue on my investing journey. If we have a closer look, we can see that my portfolio is now expected to earn over £2,400 on a yearly basis, which works out as a monthly average now at over £200. So coincidentally, we've actually hit another big milestone, with that £200 monthly average also being hit today. So another great milestone to hit, and something that's very exciting for me to see. Something I really like about this graph is that it breaks down which company has paid me in previous months and how much that payout it was exactly, and then the companies that are paying me in future months. And again, it highlights every single company that's going to be paying me for that month and what their estimated payout is going to be. For the most part, these estimated payouts are going to be very accurate, and if anything, because most of my stocks are dividend growth stocks, the only thing I'm going to see is that they are going to have a dividend hike by the time that payment comes out. So in theory, these payments could actually go up without me even investing any more money, because they are growth stocks. So like I say, they could potentially be hiking those dividends before these payments are to be paid out, which is just another reason to be so excited. I personally think it's very important to track your portfolio as a dividend investor, and I would definitely recommend that you should be tracking your portfolio closer if you are a dividend investor. So it doesn't have to be necessarily an app. It could be, say, a spreadsheet on Excel or something to track your portfolio, but please do so, as it means you get a clearer picture of where you're heading with your portfolio, and you can set out specific goals then and targets that you are going to meet within the short, medium and longer term. Now, if we have a closer look at the portfolio itself, you can see that I have the majority of my current positions in the green, but there are a couple that are in the red. Right now we have 1, 2, 3, 4, 5 positions in the red out of 24, so not bad going. But out of these 5 positions, we can see that 2 of them have performed significantly worse than the rest, with them being PepsiCo down 24% and Louis Vuitton, which is currently down 17%. So between them, I am down actually over £500. But the rest of my positions are in the green, and we do have some big green positions with the likes of British American Tobacco being up 47%. We then have Microsoft up close to 39%, Legal & General up over 27%, and the best performer in the portfolio being BAE Systems, which is up over 89%. So one that I did a stock analysis video on back earlier this year. So if you haven't checked that out already and you want to see what I believe is a fair price for that one, please go and check it out, as I definitely bought in for a fantastic average price at around £12. And like I say, there is still some other solid performers with the likes of Visa up 23%. We have Greencoat UK Wind up nearly 10%, Vici up over 13%, and my Vanguard S&P 500 fund up over 13% as well. Like I mentioned earlier, all of my stocks pay a dividend, with some paying out some juicy yields, and you can see on this graph here each stock that has paid me a dividend throughout my investing journey and how much I've actually received from them. So interestingly, we can see that I've received over 10% of all of my dividends from Vici Properties, having received £157 from the company. We then have JGGI, which is over 8%, and Greencoat UK Wind at over 7.5%. Some other noticeable ones are Legal & General and Safe Store Holdings, both paying me over 4%. And we have Diageo, which is no longer in the portfolio, but it did actually pay me over £60, which is over 4% of all the dividends I have received. So RIP to Diageo, but shout out still being part of this in this video. It'll also be very interesting to see how this changes over the next couple of years, to see which different dividend paying stocks are actually going to be at the top end of it. Is it going to be similar stocks, or will I have invested in new stocks or potentially have bigger positions in my current holdings, which then propels them forward to being some of the top dividend payers within my own personal portfolio? Another really nice visual chart on Snowball Analytics is this passive income diversification pie. You can see on here the different percents of each different company or ETF that I own and how much they are likely to pay out over the next 12 months. So we can actually see that the 2 biggest payers, which shouldn't be a shock to yourselves, is my 2 ETPs with Coinbase and Tesla taking up nearly 30% of my overall dividend payout over the next 12 months. We then have my JP Morgan Global Growth and Income ETF, which is going to be paying out close to £300. And you've got to bear in mind as well that this is obviously if I don't add any more capital to the portfolio. So I know that I will be continuing to add throughout the next year. So these payments are only going to get bigger, which is just, again, very exciting and motivating for myself. And finally, I'm going to show you another newer feature on Snowball Analytics that I really do like, which is this feature here that means when you plug in certain numbers, you can see the likelihood of when you'll be able to retire off of your dividends. Now, this is my very long-term goal of hopefully being able to receive over £24,000 on an annual basis from my dividend payments. And as you can see right now, it's pretty cool to see that I'm over 10% of the way there. And with my current dividend growth at 6% with a yield of 4.5%, they believe if I contribute £800 on a monthly basis, I will be able to achieve my goal by 2040, which is within the next 15 years. If I scroll down, it actually shows what the likelihood is of my passive income every single year on the way to that £24,000 goal. It would actually hit £25,000 by 2040. So again, just something that's very motivating to see and a really cool tool to use. Obviously, it's not something that's going to be super accurate, as my growth rate may change or my investment amount may change on a year-to-year basis. But it's just another tool to keep you motivated and hungry for more. Something that's really exciting about my own personal portfolio is that my dividend growth rate is actually above this current 6% mark on here, which means once I earn enough money from my portfolio to live off the money, it will continue to grow at a rate where it beats inflation, so I can withdraw all of the money from my portfolio and use it to pay for my living expenses, and my portfolio will actually continue to grow in size because of that dividend growth rate. So if you are a dividend focused investor and want to start using this app, then I do have a link down in the description below if you want to get some discount off if you do decide to sign up. And that wraps up today's huge £50,000 milestone video. I never thought I'd be creating this video within the first 2 years of my investing journey, so it is a milestone that I'm incredibly proud of. But this is just the beginning. The goal now is to keep building, keep learning, and stay consistent in the market. If you're on your own investing journey, remember it's not about timing the market, it's about time in the market. Thanks so much for being part of this journey with me. If you got value from this video, drop a like, subscribe, and let me know in the comments where you are in your investing journey. I'd love to hear your goals. Here's to the next milestone. Make sure you keep compounding and stay patient in the market because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.